Okay. So like I say, I wanted to talk about entries today, because pretty much it's so important to kind of realize and recognize just the sheer how critical they are to your success. Like this it's one thing to know where a stock could go or what's the level that you want it at, but it's another thing that when that opportunity shows up, you have to execute on that. And that's what we're going to talk about today entirely, the psychology behind entering a trade essentially. So just some thoughts on executions. So executing a trade is important because it has to be perfect or else you will lose money. Okay. And that's true. I mean, executing a trade is super important. It has to be perfect or else you'll start losing money. I mean, let's say you buy right now on like something like Boeing, okay? Or like something like SPY, anything, and your level might be just like a buck lower, but you might want to enter just a starter position now. Like if it's not perfect because it's just a starter position, then that's fine. But if it is your bulk position, then you want to make sure that you're like a hawk on that kind of thing. Like you have to make sure that that is the most efficient possible entry that you possibly could have. And if it's not, then I would get out of that position and then reposition a little lower on the chart. Right. So something that is the truth, really, nobody will tell you in real life is there's no perfect entry, only better entries than others. And you'll find it difficult to make money by entering without plans. So here are a few that we had this week and last week that really guided us into making thousands of dollars. This week, last week, and today mainly was pretty much a big hit. So executing needs to be done at the most perfect and the closest, at least, to perfect that there is. It's pretty hard to catch the exact bottom. Even I and even sub, don't even catch the lowest possible candlestick. I mean, you guys have seen me do it in live trading before a few times, but honestly, if I'm trying to get into a position and sometimes, it looks like it could bounce at one level and then it just somehow the market is not prepared for it to bounce at that specific level that you might have expected it in the first place, brings it just a little bit lower, and then the real move happens. So don't try to focus on catching the exact bottom because you're going to be inconsistent with that. It's really difficult and it's unrealistic. To be realistic, I want you guys to really focus on looking and considering your entries slowly, methodically, and strategically planned. Okay. So that starter position really helps with that emotional stress, lowering that. And also just realizing that you don't have to be all in ever at any time. And also realizing that it's more profitable to have and less stressful, in fact, to have that patience factor involved in your trading. Literally, like you're waiting, you get that entry, you get that starter position, it's down like 5 to 10%. Awesome. You're not going to just add one more for no reason. You're going to add one more because the level that you believe in your heart of hearts that this stock will bounce at, in your humblest opinion and highest hopes, will bounce at. And you're not being, out of pocket with that idea. You're not being delusional with that idea. You're being very realistic. Okay. And so as long as you're being realistic, you're not being delusional, not being biased, and not hoping that it's going to bounce there, then more than likely you're going to experience a positive success on that trade just because all that plan is laid into place. Okay. Okay. So the trick that everybody keeps on asking me, how do I know where to enter? How do I know the exact entry point? Well, honestly, to be as generic as possible about it, because everybody is going to kind of use this in a different way. The general way that I do this is I enter at a place where if I am wrong, I know almost immediately to minimize my risk and maximize my potential reward, right? I mean, think about it. If I tell you guys, hey, you know what, I'm buying Tesla under 278, okay, which is a recent trade I took in the last few days. So let's say 278 is right there on that line. If I want to enter, I see price kind of descending. Let's say it's making like a little descending wedge into that zone. I'm thinking, you know what, I would rather enter right here when it's under that, thinking that it's a fake out, and then seeing that it could go up, right? Because if I enter right here and then it continues to go down, I know that it shouldn't have done that. And I would have cut for probably like a 2-3% loss, like at the most bloodiest. Okay. But if I'm expecting the stock to turn around right away after I buy it, I'm not giving myself too much room to be wrong. Therefore, if it goes any lower than this specific level, I know to cut, because that's strange and that should not be what's happening in my plan. Like, that's literally like in my book. I look at the books, I look at the blueprints. Okay, sinking under this 278 level, not in the books, not in the books at all. So I'm thinking, okay, and I want to be realistic, because sometimes if you're staring at the 1 minute, guys, you're going to see like a huge wick down here and then instantly get back up, and we did that on a SPY trade today as well. So first of all, it's one thing to talk about that, but it's another thing to kind of show you guys. So I want to. One of these examples was around this middle of the day on SPY, okay? And right around the bull flag that happened around here, we saw that kind of thing push up, come back down, and then make another bull flag, okay? And so I had been trading SPY pretty much at any moment in time here, but noticing that one thing really, really impressive was finding this level that I had right here. So I looked at this level because I had some students in live trading ask me, hey, where do you think is the short for SPY? Because this thing was just nonstop ripping. Okay. And so once I saw that kind of bounce yesterday, and then I even extended that to the left, you can even see how important that level was at 366.7, 366.8, or even 367. You could be as generic about that as you want. That general zone is why I would take a trade at all around there. Okay. And so I alerted this in the voice chat, and we made about 50% of our money back. 30% the first time, then there was one later, about 50%. So just having that level right there helped me identify, okay, this could reject, right? Or this could break out above and then retest and then push up higher. I don't care what it does at that level. All I want to do is wait for price to actually happen, show up, and then I will react. Whether it rejects that supply zone or that general resistance level, or whether it breaks out above it and supports it and then continues higher. So because of that push, I'm thinking, okay, awesome, that's happening. And so that's why I would enter calls. See, so if I would look to have that level just on my frame, let's make it easier and just make it like 366.7. Okay. So now that I know that on a 15-minute time frame, that's my very strong level. I think SPY is bull flagging and consolidating. I mean, look, at least right here at 366.4, if you see that on the way right, 366.4, every time it goes under that, it looks like it's bouncing. Okay, awesome. Now that it's broken above, it's coming back down. Awesome. I want to see some kind of slowdown here. I'm not entering until that bus stops and those doors open. I'm not just going to stand on the highway with a 100-mile-per-hour bus and just get splattered, So I'm going to wait. I'm not going to enter like right here. I would just get hurt on 0 DTEs. I would wait until this happens, enter the trade, and then hold through that. Phenomenal. The other trade that we took was right here. I actually remember right here. So the reason I chose that area was because I noticed that this little area of demand right here on SPY, and I know it is a 1 minute, but if you just kind of look at it and bear with me a little more, or bull with me a little more, right around there, you can kind of see that general area, that general zone, price likes to react around it. And so who am I to say no, right? I got in actually right here at this candle, and we were up about 10% before, that candle right there, before this push down. Zooming on that a little further, this pushed down, and then this pushed up all the way. And at the top here, we were up about 30%, and I cut a lot of the position. And then I was just talking about stuff in live trading and then held it, and then it ended up pushing for even more. Okay, because it was bull flagging, it came down into the area where the buyers bought it. And so just thinking about this entry wise, what I'm doing here is I'm experiencing a pattern on top of a area where price had already reacted multiple times. And then I'm entering at that zone because that, in my opinion, is an area where the price either turns around or immediately sinks through, because that's the sensitive zone. That's been identified to be the sensitive zone. So I would enter around here just to get some skin in the game. You saw a reaction right there. I was up 10%, and then they offered a little bit more of a fake out to buy more. If you bought more, congrats. If you didn't, no worries. Either way, you were up on this trade at the end of it. But with zero DTEs at this spot right here, you would have probably been down like, you probably would have been down like 15 and 20%, maybe 20%, maybe. That's a little harsh, I think. But it didn't last for more than a minute, and then it pushed up. So while, this is why it's so dangerous to watch the 1 minute time frame, because, you could enter at an amazing spot, and SPY can still dump out a little bit harder and then push up to stop you out. So be careful watching the 1 minute with zero DTEs, guys, because you could get stopped out left and right. Another reason why the 1 minute's dangerous is if you just literally look at this entire structure as a whole. Where I entered in live trading was right around this candle at 7:58 in the morning. Okay. Not at the exact bottom, but nonetheless, I had a zone here, figured that honestly, it would bounce at the top of that right there. So that's why I entered a little bit early right there at 366.4. And then seeing this consolidation right here just lasted for such a long time, your zero DTs probably would have been chopped up. But nonetheless, at the end of it, if you got that super aggressive buy, those 0 days would have gotten popular again, obviously, and pushed it up, which is what happened to me. And I was able to close out for a 50% gain on that contract. So awesome. But the dangers of that and the emotional stress you would have had if you had like lots of size on that kind of thing, on that kind of setup, would have just been too much to handle, too much to bear, and honestly not really worth it, the stress, in my opinion. So it's just very, very dangerous to watch that 1 minute time frame. Just want to highlight that again for you guys. Okay. So that was one thing. And another one was actually right around this, where I was alerting a strangle on the QQQ today. And this was around the moment Powell was speaking today at 10:15. So I actually did a couple strangles, but this was the one that I did just before the 10 o'clock hour Eastern. Okay. So I alerted the QQQ strangle, 276 call, 272 put. Okay. Both of the contracts, I literally filled at 1.07. So at the bulk size, it was 1.07, and they were fluctuating super, super quick, but I had limit orders at 1.07 because I wanted the exact same dollar amount on both sides, and they were moving fast enough that I saw I could probably get filled. And so I did get filled. It was great. And that was at 6:56. So if I just pull up the QQQ here, right? Obviously, you guys know the reason that I would do such a thing is because I'm expecting a very violent move. Okay. So at 6:56 right here, I alerted that strangle. Okay. And so that ended up pushing up very quickly. The call leg was nice, but of course I wanted a more violent move, which is why I would anticipate and enter that in the first place. Now, remember last time I did this at this exact time because Powell was speaking at 10:15. And last week when he spoke at, what was it, 11:30, 11:30 my time, 2:30 Eastern, your guys' time, I believe. The actual like aggressive move, one of the most aggressive moves happened 30 minutes prior because that's when news came out. Okay, so I just anticipated that there was more than likely going to be a similar kind of trick happening again. And so I decided to do a strangle early and then hold it for a few minutes. We actually were lucky enough to go flat on that. And then this pushed up very aggressively. That call leg was up at least 30%, I believe. I closed it out for, I think, over 45% gain. And then I closed the call leg. And since I'm waiting for Powell, I'm thinking, okay, there should be a little bit of volatility between now, after this aggressive buy up, and the time where he actually speaks, which would have been right here at 7:15 my time. Because of that, I held my put leg, and that one shot up very, very highly. So we were able to make over 40% gains on both sides. I was down immensely on my put leg by this time, but it doesn't matter because I profited on my call. And then holding that put all the way through, we just came right back here into the demand right here and then pushed up. And again, I don't want you guys drawing supply and demand zones on a 1 minute time frame because it's just too dangerous and honestly not worth it. Because then you're gonna do 0 DTEs with it, and it's gonna be just a whole shit show. So just don't do it. Okay, focus on the 1 hour, the daily. Those guys should be your best friends. Also, because subs here, the 30 minute.
Oh yes,
That's
yes.
a that one's gnarly. That one's really good, honestly. I
You
like
like that? The
it's
half
good.
hour candle's nice,
It's
man.
like, yeah, it's like the little brother of the 1 hour. It's
Yeah, I
half
like the
an
half hour. It's like just enough that it's because the hourly for me at least when I look at the hourly, it's like it's very sharp and jagged. The chart looks so jagged. So on the half hour, I can kind of see like bottoming patterns more. I can kind of see rounding more.
right.
Obviously, hourly rounding is fantastic, but it takes a lot more sessions to see that.
Yes. Yeah, yeah, yeah. I like that. And it's only double the amount of candlesticks. Like that's still very valuable information. And what are you gonna do? Just not look at every single time frame possible in the first place? Like you have to. So so yeah, I mean, of course, half hour, 1 hour, whatever you prefer, daily, weekly, monthly, nonetheless, they're all bigger and better than the 1 minute. I promise you that. So looks good. I like that. And that was the psychology I had on entering that trade, since we want to talk about entries. Now, guys, of course, with any questions at all, please, please ask. This is so important. This is so important to you guys as much as it is to me. Okay. So any questions you guys think about, let me know. Now, this is the big one I wanted to talk about today was BA. And they made fun of us on Instagram for this. You
Did
guys don't.
they? Who made fun
Yeah,
of us?
they did. They made fun of us for it. I mean, because listen, they're watching the 1 minute, and that's okay, and that's why we're here to help. So pretty much, sub, this is the one of the most genius trades. I mean, every time you bring up Boeing, it's like magic happens. So honestly, and I say that with truth because look at it. I mean, you got to love that hourly slowdown, okay? And something we really have, one of the biggest tricks we teach in our community is just this rounding right here. Okay, as a whole. That's literally the stock slowing down, at least in our eyes, how we see it and how we understand it, okay? So, Subnative, I think you were able to enter a big position on Boeing. I know you got in a little bit early because trying to catch the bottom, it's a hard thing to do, but it's the most profitable thing to do from your
Yeah,
experience.
and
And
that's where we size in. That's where I started small. I started with like I think it was only 200 shares. And then as we started to kind of get into this, this rounding, this bottoming, I was really getting more conviction that all right, this is going to be the trade of the week for me at least. And I started to size in more. I bumped it up to 400, 500 shares, and you were there when I actually tacked on the final 400 there to make it a 900 share position.
yeah, I mean,
And yeah, we're in this market where we kept popping every morning, so I would sell that pop and reposition each time. But I held it. After yesterday, I was able to get my fill down to about 127.5 was my actual price on 900 shares, and you guys do the math on that. What are we at now? 135 or no 133? Yeah,
mhm.
that's and then if you show them the daily chart too, this is just simple to tell. Look at how we closed yesterday. Perfection.
Yes.
You could not have asked for more.
Yeah, you guys in the community know the bullish candle combo. This one right here, little bearish hammer, bullish hammer, awesome. And next day we saw, I mean, how slow it was on top of 128, 127 area, and that even made me convinced to buy some after hours. And yeah, it was awesome. So that trade was just wonderful. Many people thought that this gap below was going to fill, and a lot of people thought, even seeing last night, man, the futures were wild. I mean, if you just kind of look, you can actually absolutely understand why. I mean, just looking at this new low here on Boeing, in the pre-market as soon as it opened, and then what did we get after that? Just straight up buying right there, it looks like. So even so, I think I remember one of us, I can't remember if it was you or me, but we were talking about news on Boeing coming out soon.
Yeah, yeah.
Just
This is I was saying this is the spot in
yeah,
markets where you start to see news drop.
yep, exactly, exactly. And so right around here, I was in live trading, and I was explaining something about, the idea behind bag holding, and also talking about entries, how we were going to have that class today. And this thing just had a absolute huge push from 130 up into 133. I mean, what, like a almost a $3 jump right there in literally just like
Yeah,
2 minutes.
massive volume, massive volume.
Exponential volume, because I heard that the news was China had ordered about 24 787s, um, or up to, I think the wordage was.
Yeah, yeah,
With
which is a huge order, and that's good because that shows that our relations are, they're maybe recovering. They might be looking all right. Like that's decent that they're still buying planes from us. So
it's forward looking
the
stuff.
stock loves that.
And besides, I think the headline should have been, "Hey, Boeing's under 130." Um,
Yeah,
and we're fans,
that's
so
the real news right there. Boeing's
that's
in demand.
Boeing was in demand. I mean, critical. Okay. And if you want to identify that demand, look no further than the biggest and most reacted zone on the daily time frame for a while. I'm sure if you put this zone way back into like years and years and years ago, it matches as well. So that's how important it is to kind of have supply and demand, and with zero indicators on your chart. No
Yeah, there's
distraction.
no indicator here to catch this move on Boeing. To catch this like $7, $8 move, there you don't need an indicator. You need a zone.
Yeah, and so I just want to calculate that, because you're still holding, if I'm correct, and at
Yeah,
one,
I held.
yeah, 127, what was it? 127.5,
Yeah,
right?
that was the fill
Oh my gosh.
on 900.
Oh my gosh. So that's what, like a $6 move right now up from your entry, like around, let's say around.
Yeah, just about.
Boeing up today is up 5.93. Okay, $5.93. So that's $6 almost by 900, about a $5,400 gain in a day. Okay, and
Yeah, that's just today. That's not including the little pops I was selling too the past couple days. So, I
oh
made a
yeah,
couple grand on each of those as well. The overall position gain so far is about 10 grand almost.
amazing, amazing. And just using large size at the, that really shows, I think, people that at the end of the day, it really is just a percentage. Whether you had 10 grand on this, what would you come out with? 1 grand profit on doing exact steps that you did, right?
Exactly. Literally.
Yeah. I mean, you with $100,000 of size on this kind of thing, phenomenal, right? And that's something that's just so, it's rare to see such confidence and conviction from a skilled trader.
Yeah, I haven't put that. That was probably the first six-figure trade of the year, honestly, that I put that much size into because I simply felt that I had to. Like I absolutely had to at this price for this company. It would be unwise to not buy it. Like you're gonna get the pop here. You're gonna get a buy from Boeing here.
Mhm.
It could have happened tomorrow, it could have happened on Friday, but it was going to happen. So
I mean, yeah, it's nothing's for sure, but of course, given the circumstances and where the market was at the time and today, with a catalyst in demand on the S&P and Dow was clearly, I think, showing strength, which you pointed out too to the students in the group, versus the Nasdaq, tech, and also just the regular stocks itself, other stocks. Now in these kind of industrials you wanted us to look out for, and here we are, up almost 5% on the day on Boeing, generating a nice profit for almost all our students in there who took and joined this trade. So this was awesome. This was awesome.
definitely. Thank you. Yeah, thank you, man.
No, thank you, man. I mean, look at this. This is what supply and demand is. Look, you said it, you predicted news, and you only got green candles. I mean, what more can anyone ask for? I mean, this is just beautiful. So
Yeah, great, definitely great trade. Definitely my favorite one this week.
exactly, I loved it. Great. So as far as entry, guys, I mean, like I say in the slideshow, like you don't have to catch the perfect bottom, and there's no such thing as the perfect entry. Like Sub says, if he could have gotten 125.1, then he would have, but the guy needs some sleep sometimes, it's like not like you're gonna get the perfect entry every single time, and you don't have to make money. That's the beauty of the stock market, is that you have to just be accurate enough. You don't have to be the most accurate in the world. We have a question actually about where you plan to exit this trade and why.
I look to exit, or at least I look to take size off at the gap fill. Yeah, about 138. I look to take some size off, but it depends. How do we approach the gap fill? What do we do when we get there? If we round up into it, I'm going to take a lot of size off. If we just straight run into it, I'm going to take a little less size off and continue watching, because there's a good chance we'll push through. And if we just push through it, then I look for, I guess, halfway through the daily candle there. If you were to, what price is that exactly? I think that's
Halfway through.
140, 143. I look to get out of. If we go through that, it's the gap fill or 143, that area. Yeah, that's where I'm going to look to get out. Because there's going to be some selling there most likely. It's going to be profit taking there most likely. I'm not the only guy that bought Boeing down low, so I look to get out at the gap fill and to reposition. Like whenever I take this, this looks to me like another one of those periods of time. I'm probably going to be in and out of Boeing again for the next month or so as it kind of makes its way up and down. And I just look to get out at gaps and supply levels wherever there's been some pretty heavy prior selling. And I'm going to be in and out. Like every time I sell Boeing and take profits, I rebuy almost immediately, and like I rebuy lightly. I like restart the starter position. I rebuy lightly.
Yeah.
And then if it goes down, which I kind of hope it does, I buy more at the better price. If it goes up, good, I'm exposed to it. That's perfect actually, because we're talking about entries right now. Like you can't get a bad entry on a good company. As long as if you have zero DTEs, yeah, you get a bad entry on anything. But if you're buying shares or even leaps, longer expiries, like really far out there, or even just 5 months out, whatever, you really can't get a bad entry on a good company. It's all about what your position is, though. That's why I go with the shares, because they don't expire. I don't have to worry about theta or anything. It's literally just the price of the company I have to worry about.
Yeah.
So yeah, that's where I look to get out. But I want to hold Boeing. I want to hold Boeing for a while. Like I'm going to be in it. I'm going to be keeping a lot of my Boeing. I'm definitely going to be holding this position because it's a great company. Like I think it should be back at 200, honestly. And so does a couple of big firms in the world, and analysts also believe it's a $200 company. So it's a great price here. This is a kind of like a buy and hold, honestly, for a while. Like this is going to be definitely a cash cow, I think.
Yeah. And, if you guys didn't take it under 130 with us, I mean, we had been averaging in and over a couple weeks now, but of course, with tiny size, and of course, swinging put options overnight, pretty much every single night, which pretty much counteracts those small share positions and even makes more profit for us to just reinvest those gains on those put options on QQQ or SPY overnight and reinvest those into more Boeing shares.
Yeah.
It's just an endless money machine from each instrument. You take, I love that your strategy specifically, you're taking profit on put options at the open of every day, no matter where the stock's at, and then pulling back out and then pushing back in, using that profit to just generate more and more capital. You take a little bit here and then you put it back over there to support the position that's on discount, in your opinion.
Yeah, definitely. That's been my strategy. It's like evolved into shares and swinging puts, taking the gain from the puts and putting it back into shares, repositioning put end of day, and just rinse, wash, repeat.
Yeah, you just
like laundry.
Right. You just feel like an absolute chess master, when you do it like that.
Yeah,
Really
exactly.
yeah, exactly. It's beautiful. It's beautiful. So that's a little bit about entries, guys. I mean, as far as any questions go, feel free to ask, but as far as entries, that's essentially what I think is the gist of it. The way that I enter is that, let's say on Boeing, for example, right? If at this point, Boeing was just already so oversold that, Sub and I thinking about, these shares, and even if you did options on this, no matter what, you see that slowdown in price, that's around that 127.5 area. I mean, why do you think he bought it right there? Because that's where he expected the bounce from. So around this day, I believe it was on Monday, you were getting into some Boeing shares deep with your 900 shares. And
Yeah.
that
Yep.
being, yeah,
That rounding, I mean, that's, you see, that's the banks literally buying it. Like, it's not just me that's buying it. It's institutions. Like, you see the rounding down, and you see it happening 2 days in a row. Like, you already know what's next at that point. The whole market's going crazy, but like, you have Boeing kind of rounding down and making a tighter form, tighter, pattern. Like, it's pretty evident what's next as far
yeah,
as the direction of the company.
I liked it a lot and it was great. And the way that you would have stopped out of this trade, guys, is if this went any lower. So like right here, we had a structure, okay? And let me draw that structure just so you kind of get an idea of kind of what we see. Right here would pretty much be our structure. And that's what the descending wedge, right? As far as I know it, or descending channel, or whatever you want to call it. Now we want to be in at the low points of that channel, because if we're expecting that to be just kind of a descending support level or demand level, then, every time it pretty much touches that level at the bottom there, whether it's right here, or I mean, right here, we look to purchase more, because that, in our opinion, is a discount. Okay. If it's a discount in your opinion, then consider the buy, And so, he wouldn't enter like on a breakout of that level right there at that 130, because why would he? I mean, look at what would have happened if he did that. This first candle ended up rejecting, and then what? He's going to think it's a rejection and then sell. Like, no, I mean, he's first of all looking at a bigger time frame than this. Entering on a daily time frame means you should be watching the daily time frame throughout your move. If you enter an option or a stock at all, no matter what the position is, with the daily time frame kind of being your formation, your structure happening on that time frame, and you buy and you immediately start looking at the 1 minute and 5 minute, I mean, you're going to always find a reason to sell. So if you buy because of a certain something, then you should follow through on that plan with that certain something. And you shouldn't let any other time frame tell you what to do entirely. You can trim, you can make good decisions, like, for example, that 1 minute Boeing time frame really pushed up really aggressively after the news came out, but that still showed up on the hourly. So I wanted to go down onto the 1 minute to kind of check out what was happening to an exact, penny. And so that helped me with my decision of getting out, because I realized that, hey, this is a little bit overextended on this minute chart now. I think I could sell. And so I definitely took some profit after that news push, and it was awesome. So basically the stop loss here would have been if we failed this market structure and just continued to push down on the chart. That would be it. But the confidence here comes from the daily time frame. That demand.
Yeah, this whole thing came off the daily.
Yeah.
This entire thing came off the daily.
Yeah. There was not a single 1 minute indicator or 5 minute used in the making of this profit. So that's pretty much what entries is all about, guys. And any questions, I'm here to stick around. But as far as that goes, and if Sub, you want to add anything, man, I mean, nonetheless, we're all good to go. It looks like I've pretty much covered everything. So any questions, any further questions, you can DM me in Discord, in the school, or on Instagram, or wherever you'd like. And also Sub's there too.
Yeah, guys, I'm in there every day. Every single day I give a plan for SPY. I give you 3 possible outcomes and how to trade these outcomes based on what price we approach. And Maestro here can vouch for me. They work. They work.
I'm going to be super, super honest real quick, if I can interject real quick. I don't think I've seen you be wrong, like ever since you've even joined the community. I can't remember like a single time that you've literally just been like wrong, aside from like some crazy companies, one Toyota, but
yeah, Toyota
that was
was an
it.
L for me.
Like you can't really count sub-natives like losses as easy, or I mean, you can count the losses as easier than you can count the wins. I mean, it takes a lot more fingers to count the wins than it does the losses. It's definitely, and the students know that, man. Like, I wouldn't say that unless it was true. I mean, look at you. So you're an animal.
I appreciate that. It all comes from the daily time frame, guys. It's literally all daily. I was looking at daily candles in November 2020 to get the level I got today, and that level worked out to a T. And I was looking at daily candle wicks from 2020. So, I mean, I don't know. It's not like a secret or a cheat code. It's really just daily time frames and zones. I don't have any indicators whatsoever. I just, we just got to think logically. Then that's kind of what we're starting to see more of. More people are starting to see, okay, we're selling into a Fed meeting, we're probably going to see buying. We're buying into a Fed meeting, we're probably going to sell. Oh, that checks back to a supply zone. Perfect. Oh, the 10 years ripping. Okay, makes sense. You know what I mean? Like, there's a whole bunch of macro factors that I look at. Those are my quote unquote indicators. Just zoom out as much as you can. If I was to give any advice at all about this, is to zoom all the way out as much as possible. There really is no bad entry on a good company. Unless, of course, you're doing weeklies.
Yeah. And like Fubo.
Yeah. Yeah, exactly.
Or Roku.
Yeah, or Zoom.
Zoom, what we're doing it on right now.
Yeah. Exactly. But yeah, I think you've about covered everything. You definitely did a great job with the presentation. Thank you again for throwing this together.
Oh, perfect. Thank you. I appreciate you for popping in and dropping your knowledge on that 100K position. That's pretty insane.
Of course.
Yeah. I mean, these guys right here, our kids, our soldiers that we're taking care of in the community, that our students are literally going to one day become their own self-sufficient traders. And that's our intention. That's our entire mission. And that's our goal, to actually teach, and actually help people. And, these kind of things we're trying to teach you because, I mean, down the line, that's going to help you. Even right now, that's going to help you. We want you to start thinking rich, like thinking bigger, thinking about the genuine way that money is and wealth is managed is by being smart about it and cutting losses like in the snap of a finger, in the blink of an eye, because your market structure is failing. And that when you enter, that entry point is critical. That execution is critical because you're doing it at a dip. You're not doing it at a breakout where, huge chance of being wrong, but at a lower end where the breakout is to the downside and that fails. That's the most likely area, in my opinion and my experience, and I'm sure Sub's experience too, where you might see rejection to the downside on a breakout to the downside, especially if a bullish pattern is involved in a huge demand zone and a huge catalyst. So we love to enter on those kind of dips. They help us. And, we wouldn't really be talking about it unless it worked for us. So we believe that it can work for everybody in here and everybody in the future that we teach. And so we're looking forward to really creating more super soldiers with you guys.
Oh yeah. These guys are going to be animals, man.
Yeah.
They're getting better. I'm seeing them getting better. Like, I'm seeing a lot of these names become more frequent and getting better at trading and having better ideas. I'm hearing AMD brought up less. I'm hearing Pfizer get brought up less.
Yeah.
I'm starting to see bigger companies, ETFs, real levels. They're sending me trend lines and charts that make sense.
Yeah.
It's great. It's so great.
Exactly. Apple was phenomenal.
Apple dumped out today. One of the students told me that he saw Apple's price action in the morning and thought the market was crashing.
No, and you know what I told them in the morning? This was around open during Powell. They were thinking that, wow, like Apple dumped, doesn't that mean the market's going to fall really hard? I'm sure a lot of the students, even in this session, probably thought that. And I told them, well, guys, have you noticed Apple's recent price action? It was actually very strong. It was one of the strongest companies I had seen compared to the rest of the market. I mean, you guys all know what the SPY was doing. The SPY was really, really falling super aggressively on every time frame. Like, look at this daily, just tanking super aggressively. But meanwhile, Apple falling, but still staying steady, having those green pushes up. Okay. And so I'm thinking to myself, well, if Apple's very strong and it gapped down on some bad news on Powell Day and a descending wedge on S&P 500 futures and SPY and QQQ, I mean, I'm thinking, I told them, hey guys, if Apple bounces, the market's probably going to rip really aggressively just because Apple's down so much. Like, it's kind of like, it's like a slingshot. I like to think about it. You know how you like pull those two, you hold that stick with like the two little wishbones on the side of it and you pull that back. So the Apple had that really big pullback. And then once that generates just that lot of momentum in my mind. That's just kind of how I theorize or understand it. When you pull that slingshot back on a stock that's super strong and you let that slingshot rip, then it's going to hurt someone and it's going to do some big damage and in other words, have a big impact, And so having a big impact, Apple bounced, SPY did not stop ripping. So that's something that is amazing. I learned that pretty recently as well. If a big stock dumps out and it's stronger than most, then it's probably going to have a huge impact on the market. But that's a side point. So other than that, guys, congrats today on the market. If you had any profits, please post them up in the profits and losses channel. And let's get back to business. Live trading tomorrow. Let's handle it. We're going to have a lot of fun.
Absolutely.
Thank you guys so much for joining today. Also, tomorrow there's another class, and that's for the private school as well. So you guys are going to see that in the live trading section.
Perfect.
So thanks guys again for coming. Okay. I'll see you guys soon.
See ya.